Well, Happy New Year and welcome to the first episode of Cattle Call in 2023. I'm Susan Littlefield on the Rural Radio Network. We are recording this on a Wednesday, and the Minnesotans are going to come up because holy Hannah, did you see what happened in that feeder cattle market? We're going to talk about what is the driving factor to those higher numbers, and it goes beyond the fact that Brad Kooima is on vacation this week. As you can see, Joe Kooima joins us with Kooima Varlick out of Sioux Center, Iowa. And we'll also take a look at maybe the new contract highs for the move, this cold weather situation that's out there. Also, we'll talk cash and some open interest as well. Lots of great things to look at. But, Joe, we got to start out with this feeder cattle market. Waking up on a Wednesday, I did not expect to see the numbers that we saw today.
Yeah, great start to the midweek, let's call it. Yesterday we were maybe, I would call it kind of pent up a little bit. We had commodities across the major five that we follow here were just lower just to start, and it just didn't quite feel right. Didn't quite want to take anything home yesterday or read too much into yesterday's trade for the most part. And then you finally just got things today where corn broke another 15 cents on top of what they broke yesterday, and it seems like the feeders just finally took off there. So they're a little bit pent up the last few trading sessions is what I believe. And then we got some technical buying, probably a little bit of fun buying as well once we started to creep into new highs here for the last 3.5 months. So it's good to see some leadership there, because yesterday it just felt odd the way that we were, but today definitely stacks up 2 days of trades onto one. And the best thing about it is that once we got to 3.25, 350 higher for March, it just stuck there. So that's a great sign to kind of carry into tomorrow as well.
So those new contract highs for the move, could we possibly continue that momentum as well?
Great question. It does feel like to me, and I think this kind of goes into the story of the open interest that could be building here as well, or has built. These funds, we both know, whether it's just corn or soybeans or whatever, they're not too afraid. If they're long and you get new contract highs, they're ready to plow into more when that does happen. So I think we saw a little bit of that today. And even the live cattle, the open interest there, the last 2 weeks, 2.5 weeks, we've seen a nice steadily increase in that open interest, which is a good sign to have, especially when we went through the holiday trade where our volumes can be a little bit light, but they were still pretty active in wanting to put on some of these positions. And the total open interest for the live cattle sector now is north of 325,000 in the last 2 years. This is our higher end, and then we usually back up down below 300, and that's why we get these weird, we can rally $6 and we give $8 back, and we just stick sideways for the most part. But it feels a little bit different. And if we look back at our 2013 going into 2014 run for the cattle market, we have a lot more room that we can put on this open interest yet. So to say that we're high at 325, sure, compared to the last 2 years. But if we look back at the last 8-10 years, there's a lot more upside potential that this open interest can attract here anyway.
And look at the fact that we saw another down day in this grain complex. That adds a little bit of excitement, I think, as well, because keep those feed costs down as low as possible.
Yep, especially with all the weather that we're going through as well. So
I want to talk about that weather, because Brad and I talked about it last week, that it just seemed like the market wasn't catching on to the amount of snow and cold weather that was affecting the cattle market. We're into a second week and possibly a third one in this extended forecast. What's it going to take to really get Chicago to say, whoa, hold on a second, it is pretty bad out there?
I think one outlier that we could see, and we both know how this weight data works. We get it every Thursday, but it's 2 weeks behind schedule, unlike the hogs. But last week we did see a slow decline in the carcass weights for both steers and heifers. And guess what? That was prior to the big cold snap that we had. So it's encouraging moving forward, to me anyway, is that these weights could really slip lower, because then we're going to start seeing, well, this Thursday we'll start seeing some of those cattle that were right in the midst of the cold snap. And then even the following week, we're going to see the after stuff. And that's what some of these weights are, I think, is what the market is anticipating to see here eventually. But I think they want to read it in front of us. Seems like that's the last couple of years. This market wants to read it and then react, as opposed to 5 years ago where I'd like to react before something like that came out.
Finally, as we get ready to wrap up the cattle call, this cash cattle market, is it a chance for some steady higher money? What's kind of your thought out there?
I think that's probably where I would start. The South can be an outlier and possibly get a little bit better, but up here in the North, I remain bullish, but I wouldn't be surprised to see some, these cattle need to be gone type of a syndrome where we've lost weight, we've lost 80 pounds, 100 pounds on these cattle, and no matter what we feed them, how much we push feed in front of them, we're not going to get that weight back. So it's best to get them gone. So this week the show lists have increased, and I think it's a lot because of that. So I wouldn't be surprised to see kind of that just inching forward, just a slight steady cash kind of a move, get those cattle gone, move on to the next group. That's a couple weeks away, but that's what I feel like. Steady is it's not bearish, but steady at best is what I hope for this week.
All right. Well, Joe, thanks for joining us this week and filling in for Brad.
Hey, no problem. Anytime.
We can have Brad go on vacation all the time if that means we're going to have cattle markets like what we saw on a Wednesday. We want to remind folks that commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's been this week's Cattle Call on the Rural Radio Network.